Regulatory compliance in cost accounting is essential for organizations to ensure that their financial practices align with legal standards and industry regulations. Cost accounting, which involves tracking, recording, and analyzing costs associated with production or service delivery, must adhere to various regulations to maintain transparency and accountability. One of the primary frameworks guiding regulatory compliance in cost accounting is the Generally Accepted Accounting Principles, commonly known as GAAP. These principles provide a foundation for financial reporting and ensure that cost data is consistent, comparable, and reliable. Organizations must implement processes that align their cost accounting practices with these principles, which often involves maintaining detailed records of costs incurred, adhering to proper valuation methods, and ensuring accurate allocation of overhead costs. Another critical aspect of regulatory compliance is adherence to the Sarbanes-Oxley Act, which was enacted to protect investors from fraudulent financial reporting. This act imposes strict requirements on financial disclosures and internal controls. Companies must establish robust internal control systems to ensure the accuracy of their cost accounting records. This includes regular audits, documentation of processes, and maintaining a clear audit trail for all cost-related transactions. Cost accounting practices must also comply with tax regulations. Organizations need to be aware of how different costs are treated for tax purposes, which can vary significantly depending on jurisdiction. This requires a thorough understanding of tax laws and regulations to ensure that cost allocations and deductions are correctly applied. Failure to comply with tax regulations can lead to severe penalties and financial repercussions. In addition to federal regulations, companies must also consider state and local laws that may impact cost accounting practices. These regulations can dictate how costs are reported and what information must be disclosed to stakeholders. Organizations must stay informed about changes in these laws and adjust their cost accounting practices accordingly to remain compliant. Furthermore, industries such as healthcare, manufacturing, and government contracting have specific compliance requirements that affect cost accounting. For example, healthcare organizations must adhere to regulations set by the Centers for Medicare and Medicaid Services, which dictate how costs are reported and reimbursed. Similarly, government contractors must comply with the Federal Acquisition Regulation, which includes guidelines on cost accounting standards. Training and education are crucial for ensuring that employees involved in cost accounting understand the regulatory landscape. Organizations should invest in ongoing training programs to keep their staff updated on compliance requirements and best practices. This not only helps in maintaining compliance, but also fosters a culture of accountability and ethical behavior within the organization. Technology also plays a significant role in regulatory compliance. Many organizations utilize accounting software that includes features designed to help maintain compliance with various regulations. These tools can automate processes, ensure accurate record keeping, and provide real-time insights into cost data. However, it is essential for organizations to choose software that is compliant with the latest regulations and to regularly update their systems to reflect any changes in the regulatory environment. In conclusion, regulatory compliance in cost accounting is a multifaceted challenge that requires organizations to stay informed about various laws and regulations. By adhering to established accounting principles, implementing strong internal controls, understanding tax implications, and investing in employee training and technology, organizations can navigate the complexities of compliance effectively. This not only protects them from legal risks, but also enhances their reputation and fosters trust among stakeholders.